Fractals are the secret code of the market. Most traders use them wrong, but today I'll show you the version that can change everything. While beginners keep losing money with it, pros are cashing in big time because they know the secret I'm about to reveal. This is not the basic fractal strategy you've seen before. This one flips the market in your favor with insane accuracy. Welcome to Trader DNA. Guys, did you know that fractals are literally the hidden secret behind almost every powerful price action trading strategy out there? Most traders overlook it because it looks too simple. Pro price action traders around the world actually rely on it because of its insane accuracy in spotting key turning points in the market. But here's the thing, the way most people use fractals is completely wrong. That's why in this video, I'm going to show you a fractal trading strategy that's not just different, it's refined, it's smarter, and it's way more effective than the old school method you've probably seen before. And I'm not just going to explain it, I'm going to walk you through step by step so you can avoid the mistakes that trap so many beginner traders. If you're new here, smash that subscribe button. Hit the notification bell because you do not want to keep wasting money on strategies that don't actually work. The strategy I'm about to share with you today takes the traditional fractal method and literally flips it upside down. See, beginner traders usually jump into a trade the moment a fractal arrow shows up on their chart, thinking, boom, that's the signal. But let me tell you, that approach is flawed, risky, and it's the reason most people lose money. Instead, with this new strategy, we wait for confirmation, and that's the game changer. That tiny adjustment might sound small, but it completely changes the game. It filters out false signals, it improves your accuracy massively, and it gives you a much higher chance of success in the long run. So stick around because I'm going to break this down in detail and show you exactly how this strategy works, step by step. Let's dive in. Alright guys, let's break this down in the simplest way possible. This fractal strategy is basically a breakout trading system, but here's the twist. It's powered by fractal patterns that tell us when the market is about to make a big move. Now, when you see a fractal arrow on your chart, that arrow doesn't just pop up randomly. It only shows up after 2 candles have already closed, which means the market has confirmed that pattern. So you're not guessing, you're actually working with a proven signal. Here's how it works. Imagine you see a fractal arrow appear on top of a candle. Most beginners would immediately jump into the trade. Big mistake. Instead, with this strategy, we wait for proof. For a buy setup, you don't just hit buy right away. You wait until the price of a new candle closes above the high of the candle that had the fractal arrow on it. That's the key. Why? Because it shows that the market actually has the momentum to break out, instead of faking you out with a false signal. This one little adjustment makes a massive difference. It's like waiting for the green light before driving through an intersection. If you go too early, you crash. But if you wait for that confirmed breakout, your entry is way safer and way more powerful. And the best part? This strategy works whether the market is reversing direction or continuing in the same trend. So you can use it to catch huge moves in both scenarios. By following this method, you're not just reducing your risk, you're setting yourself up to capture explosive price movements right after the breakout. It filters out the noise, it protects you from premature entries, and it gives you way more confidence in volatile markets. And trust me, once you start applying it, you'll realize why so many traders swear by this strategy. Alright guys, let's talk about how this strategy works when the market is going down, because this is where things get really exciting. Here's the smarter play. Once that down fractal arrow forms, we wait. We're looking for proof that the market actually wants to keep dropping. How do we get that proof? Simple. We wait for a candle to close below the low of the candle where the fractal arrow appeared. Think of it like waiting for the floor to break. If the price closes below that level, boom. That's your confirmation that the market is ready to fall, and that's when you take your sell entry. Why is this so powerful? Because without confirmation, you could be selling right into a trap. Markets love to fake traders out with little dips before shooting back up, and that's how accounts get blown. But by waiting for the candle to close below that key level, You're basically saying, show me you're serious before I commit. And when the market delivers that proof, you enter at the closing price of that candle, and now you're riding with momentum, not against it. This simple but super effective rule makes trading way safer and way clearer. Instead of guessing, you have a step-by-step signal that tells you exactly when to sell. And the best part, you're not stressing over temporary price noise or random fluctuations. You're only acting when the breakout is real. That means you're making more precise decisions, avoiding bad entries, and stacking the odds of success in your favor. So remember, down fractal arrow plus candle close below the low equals sell with confidence. This is how you catch bearish moves like a pro without getting tricked by the market's fake outs. Trust me, once you start applying this, you'll see how insanely effective it is in trending market. All right, guys, let's break this down step by step with a super clear example so you can actually see how this strategy works in real time. Imagine you're staring at your trading chart and suddenly, boom, an up fractal arrow pops up. Now, what do most beginners do? They get all hyped, smash the buy button instantly, and pray the market takes off. But here's the truth. That's exactly how you get wrecked. That's how you lose money fast. The smart move here isn't to rush. The smart move is to wait. So what are we waiting for? Let me show you. First, we're not just looking for one lonely fractal arrow. Nope, we're looking for a lineup. Multiple up fractals forming in almost the same horizontal area. When you see that, it's not random. That's a big clue. That's the market whispering to you, hey, something important is happening here. And that area, my friends, is what I like to call a treasure zone, because if you play it right, this is where you can scoop up profits like digging into a gold mine. Of course, as long as your money management is solid. Now let's simplify this. Step 1, look at the overall market direction. Before these fractals even show up, you should already see the price trending upwards. That means we're in a bullish trend. Step 2, once the fractals start lining up horizontally at the top, boom, you've got yourself a resistance zone. But this isn't just any boring resistance level. This is special. Why? Because it's built out of fractals. It's a fractal zone. And trust me, when a zone is made of fractals, it's way more reliable. Step 3, if the price actually breaks through that fractal resistance zone, that's your green light. That's the market screaming, the bulls are back and the trend is ready to continue. At that exact moment, you don't hesitate. You enter a buy trade at the opening of the next candle. And of course, like any pro, you protect yourself. You place your stop loss at the nearest swing low. And when this plays out, it's beautiful. The price doesn't just creep up. It shoots up smoothly, continuing the bullish trend, but was already in motion. That's the power of this strategy. It filters out the fake signals, gives you a clear plan, and puts you right in sync with the market's momentum. And when you see it happen live, it feels like pure magic, except it's not magic, it's just smart trading. All right, guys, now let's flip the script and check out the second scenario, but this time we're looking at a bearish trend. So picture this. You're staring at your chart and the price is dropping lower and lower. Boom, right there. You know the market is in a clear downtrend. And remember what I said earlier? This is crucial. You can't just use this strategy in random conditions. The trend needs to be super obvious, crystal clear, no questions asked, because if you're trading against the trend, you're basically just throwing money away. Now, check this out. On the chart, we start to see multiple fractal lows lining up at the same level. That's what I call a fractal support zone. And trust me, this isn't your regular boring support line. It's special because it's built from actual fractal formations. Think of it like a treasure chest forming right in front of you, waiting for the moment it bursts open. So here's the move. We wait. Don't jump in early. Don't try to guess. You wait until the price smashes through that fractal support zone and actually closes below it. That's the golden signal. Right there, you've got $1 million setup. And when that candle closes under the zone, it's time to pull the trigger. You hit sell and you place your stop loss just above the nearest swing high. Simple, safe, and insanely powerful. And look what happens next. The price doesn't just trickle down, it dives. It continues the bearish trend beautifully and your entry ends up being spot on. That's the magic of this fractal breakout strategy. It cuts through all the noise, gets rid of fake outs, and forces you to only trade when the odds are stacked in your favor. And the best part? With just 3 insanely simple rules: identify the trend, wait for the fractal zone, and only enter after the breakout, you massively cut down on false signals, boost your accuracy, and finally trade with structure instead of guessing. No more gambling, no more chasing. This is about trading smart, disciplined, and confident. Once you get used to waiting for confirmation like this, you'll be shocked at how much better your trades perform. Trust me, you'll never want to trade the old way again. Alright guys, let's make this super simple so anyone can get it. In a buy setup, here's what's really happening. The price is literally breaking above a barrier, something we call a resistance level. Think of resistance like a ceiling. The price keeps hitting it, but every time it tries to go higher, sellers push it right back down. That's why historically, the market drops after touching that level. Sellers are stacked up there like a wall, ready to push things lower. But here's the exciting part. When the price finally flashes through that ceiling, everything changes. That breakout means sellers are backing off. Some of them even close their positions because the market is no longer going in their favor. And when selling pressure decreases, guess what happens? Buyers step in, the floodgates open, and the price surges higher. It's like breaking through a locked door. Once it's open, there's nothing stopping you from running straight through. Now flip the script for a sell setup. This time, we're looking at a support level. That's like the floor. The price keeps bouncing off it because buyers are down there holding the line and pushing the market back up. But if the price breaks below that floor, boom, it's game over for the buyers. Their strength is gone and sellers take full control. That's when the market starts diving lower and you get your chance to jump in on the move. So what's the big lesson here? Trading is basically a battle between buyers and sellers at these critical levels. When buyers lose control, sellers dominate. When sellers get exhausted, buyers take over. And by understanding this dynamic, this constant push and pull, you're not just guessing anymore. You're reading the battlefield, spotting when one side is about to win, and then positioning yourself to ride the wave in the right direction. That's why these breakouts are so powerful. They don't just show price moving, they show a complete shift in control. And if you can spot that shift early and act on confirmation, you put yourself in the same mindset as pro traders who consistently win. Alright guys, let's be real. Up until now, the fractal breakout strategy we've been looking at is good, but it's not unstoppable. And the reason is simple. By itself, it doesn't fully sync up with the bigger picture, the overall trend of the market. And if there's one golden rule I've been screaming over and over on this channel, it's this. You always want to trade with the trend, not against it. Think of it like surfing. You don't paddle against the wave hoping to ride it. You wait for the wave to build and then you ride in its direction. That's how you go further, faster, with less effort. Trading works the exact same way. And the fractal breakout strategy is amazing at spotting potential entry points. But if you take those entries without checking the trend, you're basically trying to surf against the wave, and that's a recipe for wipeouts. Here's why it's such a big deal. When you trade against the trend, you're way more likely to run into fake signals, false breakouts, and sudden reversals that stop you out. That's why beginners often get frustrated. They see the fractal arrow, they jump in, and then boom, the market flips and takes them out. But when you align that same fractal breakout with the dominant trend, you flip the odds massively in your favor. Trend following means you're going with the flow of momentum, and that's where the big money is made. Instead of grabbing tiny risky moves, you're positioning yourself to capture those huge sustained price runs that actually pay off. And the best part? Your risk to reward ratio gets way better with golf because you're not fighting against the market, you're moving with it. So here's the takeaway. Using fractals alone is like having a map without a compass. You know where the roads are, but you don't know which direction to go. But when you combine fractals with trend analysis, it's like having GPS navigation. You're no longer guessing, you're following the right path with confidence. That's how you turn a decent strategy into a powerful, consistent money-making system. Alright, listen up because this part is going to blow your mind. We're not just stopping at the first fractal breakout strategy. Nope, we're leveling up. This is where things get more aggressive. But don't worry, we're keeping the accuracy super high so you don't just get random signals that waste your time. Here's how it works. We're going to use two powerful tools called moving averages, the 200 period moving average and the 14 period moving average. Now, if you've never heard of those before, don't panic. The 200 period moving average is basically like your GPS for the long-term market trend. If the price is above it, the market is in an uptrend. It's like climbing uphill. If the price is below it, the market is in a downtrend. It's like sliding downhill. This one simple line is going to keep you from fighting against the big wave. And trust me, you never want to surf against the wave. You'll get wrecked. Next, we add the 14 period moving average. This is your short-term radar. It's like zooming in with a magnifying glass to see the little wiggles in the price. So when we combine the 200 and the 14, you're basically seeing the big picture and the tiny details at the same time. That's how you avoid getting tricked by fake signals. Now let's run through an example because this is where it gets exciting. Imagine the price is above the 200 period moving average. That means the market is bullish or trending up. You don't want to just jump in randomly though. You wait, the price might dip temporarily below the 14 period moving average. That's just a little pullback. And here's the golden moment. If an upper fractal forms during that dip, you don't rush in yet. Instead, you wait for confirmation. The confirmation happens when the price not only climbs back above the 14 period moving average, but also breaks above the high of the candle where that fractal formed. Boom, that's your green light to enter a buy trade. But here's the secret sauce. You don't go in without protection. To keep your risk low, you place your stop loss just under the 14 period moving average. That way, if the market suddenly flips on you, your losses are tiny compared to your potential gains. And the best part, this works in both directions. If the price is below the 200 period moving average, the market is bearish or trending down. Same logic applies, but flipped. You wait for a small bounce above the 14, spot a lower fractal, and then wait for the price to drop back below the 14 and break the low of that fractal candle. That's your signal to smash sell. By combining these three pieces, the 200 moving average, the 14 moving average, and the fractal breakout, you're stacking confirmations like checkpoints in a video game. You're not just guessing anymore. You're filtering out the fake outs and locking in on high probability trades. And that's exactly how you turn an aggressive strategy into a smart, controlled profit-making machine. All right, listen up, because this part is super important if you don't want to blow up your account. Fractals look awesome because they show you pullbacks and possible reversal spots, but here's the truth. They are not always right. Sometimes they're dead on, and sometimes they can totally fake you out and drag you into a bad trade. So if you only rely on fractals by themselves, you're basically flipping a coin, and that is not how you win in trading. Here's the smarter play. You only want to take those fractal signals when the fractal and the entry candle are both on the same side of the moving average. Why? Because the moving average is like your compass. It tells you the overall direction of the market. If the price is above the moving average, the trend is up. If it's below, the trend is down. Simple, right? So when your fractal and your moving average agree, it's like having two teammates pointing in the same direction. That's when the odds are stacked way more in your favor. Now let's talk about what happens when the market is flat, ranging or moving sideways. That's when the moving average looks flat, has no real slope, and price is bouncing up and down around it. And this is where traders get wrecked. Because in these sideways markets, fractal signals can pop up on both sides of the moving average. One says buy, the other says sell, and all you get is chop, whipsaws and frustration. You'll get faked out again and again. That's why sticking with the rule of trading only in the same direction as the moving average is such a game changer. It filters out the junk setups, keeps you away from 𝗙ecie sideways markets, and helps you focus only on trades that actually have momentum behind them. the fractal is powerful, but it's not enough on its own. You need context, you need filters, and you need trend alignment. When you combine fractals with the moving average like this, you're making smarter, higher probability decisions. And that's what separates the traders who grow accounts from the ones who blow accounts. This strategy is insanely accurate, but only if you actually stick to the rules we talked about earlier. And here's the deal. If the rules aren't met, don't even think about entering the market. Seriously, don't force it. That's how beginners blow their accounts. The best part? This strategy is crazy simple. You don't need to be a math genius or spend hours setting things up. In fact, I've made it even easier for you. I put together a ready-to-use template you can download straight from the description. Just load it onto your chart and boom, all the indicators are there instantly. No stress, no confusion, no wasting time. It's basically plug and play trading. And hey, if this video helped you understand something new or made trading feel way simpler, do me a favor. Smash that subscribe button, hit the notification bell so you never miss the next strategy, and share this video with your friends on WhatsApp, Facebook, or X. That way, you're not just learning, you're helping more people level up too. Thanks for watching, and I'll see you in the next video.